Hey guys, Mike here. So, oh boy, what a day in the market there. Got a little more red, but we did have something happen, which I'll show you on the chart, especially when it comes to Tesla. I'll show you them. They got kind of rug pulled today by somebody, and I'll show you it's like the cheapest book, or cheapest trick in the book, I should say, you do when a stock's running up a lot and you want to get involved. This is what you do to it, okay? So I'll show you that. We're also going to go, first off, right into like liquidity, right? This is a big question we get all the time, so I'm really going to show it to you. What exactly is happening behind the scenes? Because I get a lot of questions about that. Like, I don't understand if the Treasury's refilling. How come a lot of liquidity ain't dropping and all this other stuff? And I'll show you that right there. And then I'm also getting to something. I'd asked a question yesterday, like what would cause a big move down in the market, right? Not a 5% move. I'm talking a big move. And somebody came up with the answer. I agree with it, and I'll show it to you. And I'll show you something very interesting about that I found today concerning that company. And you definitely want to know this. But what you see happening, guys, is simple. Here's a Treasury account, right? They're selling treasuries. You can see they filled it up, right? Going from like 45 billion to over 100 billion, somewhere in there. What at the same time is happening? This is what I covered when everybody's doing those fear-mongering videos about, oh my God, we're going to drop off a cliff. And I said, well, why don't it just go from the reverse repo, like, because banks are going to be one of the biggest purchasers of these treasuries, right? And because it's easy money for them, why not just, instead of putting in the reverse repo program, just buy treasuries? So you've seen the reverse repo program, obviously, that actually dropped under 2 trillion for the first time in quite a long time, right? But what also is happening? What's the Fed doing? Because they don't want to compete with the Treasury when they're trying to sell these assets and stuff. And so what are they doing? Their balance sheet just went sideways, right? And so because they don't want to get in the way, they know what's happening. And they're so delicate about how they want to do things because they don't want to interrupt the markets. They don't want to have a big liquidity crisis and all this other stuff, and so that's how you got to think about this. But there is, this narrative out there, and who knows, we'll have to see what happens. I've said there should be some kind of liquidity drain for sure as this is going on. We just don't know how big. And so this kind of forecasts it, right? It says, okay, assuming the TGA, which is the Treasury account, reloads the fund entirely by RRP, you should still see a drop. Now, if only 50% is done by the RRP, the reverse repo program, which I showed you, then obviously it should drop a lot farther. And so, of course, my argument, when people are making all these fear-mongering videos trying to scare the brakes off of you and everything, the market's going to drop, 30% in June, which, of course, we're only 1 week, I'm about 1 week left in June, a little bit more. But it's kind of like, if I'm the government and then this is the reverse repo program where banks are, piling the money, and this is the Treasury account, and I got a pin here, and then it goes, oh, instead of going the pin here, I'll just put it here. Do I still have a pin, or did I lose anything, right? And so the pin would be liquidity, right? And so, no, it's still there. And so that's kind of what's happening now. Does that mean it's going to continue? No, not one bit. But right now that's what's been happening, right? And the Fed is quietly behind closed doors, like going, well, we'll just sit here with our balance sheet and not try to shock the system. And I really believe that's why they didn't do the rate hike. To be honest with you, could be totally wrong, but I think that's why they also did it as well, because they wear tap shoes, right? And so again, they don't want a credit crisis. They don't want to do anything that's gonna mess stuff up, and they toe tap around the market like crazy. That's what they do, right? And so it is what it is. But and speaking of the Fed, Jerome Powell did speak today. Don't even bother wasting your time. That man said nothing different. Like, I mean, why would he, right? He got grilled and they talked about some stuff, but and some of the questions he gets are just totally stupid. I don't understand why they ask him about diversity in the economy. I mean, that is not his job. Like the man said, I got one rate I can raise and lower. I got a balance sheet I can run off. It is the government's job, Congress, to try to make sure everything is fair out there. Okay, and if they want it to be fair, they see a problem, you're the one that passes laws, right? And I want it to be fair and balanced. So do your job. Quit trying to blame. That's one thing I can't stand when they keep asking me those stupid questions. Like, what are you going to do? Well, he's like, I'm the Fed president. What do you want me to do? He's like, I'm limited. I got a rate. I can raise it and lower. You're the ones that make the laws. All right? So fix it. If you think there's some diversification issue, fix it. Do something. Quit trying to blame everybody else for it. I mean, do your freaking job. How about that? If you feel like there's a problem. Sorry about that. But I just get so tired of that question. It's like, it's not his job. It's not his job. Okay? He's got enough to worry about at this point in time. But speaking of him, of course, when he got done speaking, all of a sudden it's like, whoa, pause, wait a minute, now there's a 75% chance, right? And so I can't wait to see when he testifies tomorrow, this go down to like 30, because he'll say something where people go, oh, I think they're still going to pause or whatever, And of course, he said today, I never said the word pause, right? And so, which technically he didn't, but again, a lot of people don't think they're going to go anymore, right? And they very well may not, right? And so we'll have to see on that. Now, I asked yesterday again, what's going to drop if anything is going to drop the market, what do you think it could be, right? Because there's nothing coming up next 30 days besides some black swan event happens that we don't know about, right? But any bad news gets swallowed up by the market, right? Today more manufacturing news came out. Guess what? Still contracting, right? Still sucks, but the market don't care. It may have been red. It wasn't on that news. Trust me, that data coming out of Philly and all the rest of them has been contracting. It doesn't phase them, okay? And I'm going to make a point, I actually made a note right here, to go back and research. I just want to know historically, like, when we shifted really from manufacturing to services, right? That's what I want to know, because we're 70% services now. So the shift had to happen something. And I'm also going to look at, just comparing the stock market, a lot of different indicators on that when we made that switch. I just want to personally know, and I'll share it with you if you want it. Now, somebody in the comments answered that question. They said, the only thing I can think of that would shock the market is if Nvidia announced a several billion-dollar downward correction to their projected Q3 revenue. And that is the truth. And the one question around Nvidia I have, and I don't know if anybody else has it, but what I want to know is with that 55% increase from quarter to quarter, which is one of the biggest we've ever seen. It may be the biggest we've ever seen from a large company. You see, like, smaller companies do it when they get some big government order and they go, we just tripled our revenues, but not a company this big with billions in revenue, right? That's shocking. And so, and when you see the whole market get taken off guard, just stunned, that's when you kind of go, interesting. But the question is hanging over them, and nobody knows it until we get to earnings, right? Which is, how much of this huge increase is double and triple ordering, and especially coming from Chinese companies. And I found this today. It came out 2 days ago, and I found 5 different articles that came out about this. And check this out. Chinese firms are actually able to get by what Biden was trying to do as far as making sure China couldn't get these AI chips, like Nvidia's chips, right? And what's happening is recent reporting points to blacklisted Chinese entities, including China's top nuclear weapons lab, gaining access to restricted chips through a combination of smuggling and renting through the cloud. Smuggling also appears to be possible for lower-level vendors. I read a really good article about these vendors. Someone actually got interviewed and talked to them. Other recent reporting found that Chinese small businesses are smuggling restricted chips through neighboring countries, and that 40 to 50,000 of these chips are already in China. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And so that's my big question, right? And I'm literally asking the question, trying to create a conversation like we always have down in the comments, and I love reading them and stuff. It's like, and that's my thing, like, and what I mean by double and triple ordering is the same thing we went through a year and a half ago to 2 years, how long it's been, with supply chains, right? Where Walmart and Target were prime examples of this. They couldn't get stuff in, had empty shelves, so they started just ordering double and triple something. And this is where Kathy Willis was right when she said the problem with supply chains back then was people are just doing these huge orders, they're afraid they can't get it. So the question is, if you're China and you're those companies there, are you really going to risk not being able to get these chips? And so you start to order. And I even found with these vendors, what they're doing is they're getting them in and then they're doubling the price to sell it to these companies in China. Can you believe that? And so, and remember, China, it's huge, right? It's the second largest economy in the world. So would you wait, or would you go ahead and say, you know what, let's get our hands on these chips now and start ordering more than what you need? And so that's the big question. We won't know the answer until we actually come up to the next quarter and they report and then project forward from there. And so that's the big one. So yes, if we come up to earnings, I can see that. We come up to earnings and they go, we made our 11 billion, I think that's what it was. However many, what their projection was. And then all of a sudden said, well, next quarter or next, maybe 2 quarters from now, it's slowing down. Well, then that lets you know. If not, then no, it's not double and triple ordering. So that's the big thing. That's what we got to find out with Nvidia, right? Because it's rare, for a company that big. Like I said, I never remember Tesla coming on an earnings call and saying, well, we projected 100,000 cars, but all of a sudden it's 2 million. Maybe that happened. I don't remember that earnings call whatsoever. So just keep that in mind. Again, let me know in the comments what you think about that, and we'll have to see and stuff. Now, a couple things to watch out here on the indexes, right? We talked about this. Obviously, these channels I showed you yesterday. Again, what happened today again? V-shaped recovery. Bam. Right? And then, of course, you're going to throw another, not really a V, but anyway, almost like a W, right? But anyway, same thing happened again today. Happened on the Qs, happened on IWM. And so that continues to happen. That's dip buyers rolling in. Now, you may have thought things look really bad because the Qs are down over 1%, S&P is down over 0.5%, all that good stuff. But really, if you look, energy was up, right? This is why the S&P wasn't down as far as the Qs. And then travel was up. Okay, so they love our travel stocks, right? Still got the cruise ships going on, right? And then also what was up? Discretionary, right? All the stores moving, stuff we don't need. We don't need to go to Starbucks, all right? We don't need to make extra trips to Walmart, Target, but all of them were up. That's where money was rolling into today, which is why it held up better. And understand, we talked about this yesterday with these channels and everything, and everything's at the top of a channel and it's starting to sell off, and can it come back down this trend line and then being way overextended from the 200-day moving average and everything? Might look like they're about to roll over. And you see how far above the 200-day that thing is. And can this happen? Yeah. If one of our members pointed this out right here on the chart, if this head and shoulders plays out, then absolutely, we could finally get not a crazy pullback. I'm talking about down to that trend line would be sweet, right? Because that would give you good entries on other stocks and everything. And so, if that plays out, absolutely. This is going to be a terrible straight line for the neckline, but you get my point. And so keep that in mind. And also on the Qs. Look at the Qs. Not as pretty of a head and shoulders, but you're kind of looking at it, right? And so, you see that right there. And so again, this is another one. If that were to play out, you would finally, as we pull up the daily here, again, remember this is at the top of that channel, has been bouncing down, but maybe you finally get a move back down to the bottom of the channel before it bounces and continues to move up, right? Because remember, it's 25% over the 200-day moving average. If you saw my video about the 150, what happens? I've only had one other time since like the 21st century started to where, actually, I don't know how many, actually, in the last 50 years, I guess, where it's been greater above its 150-day moving average on the Qs, which was 30% a couple of years ago, before you get these kind of pullbacks, anywhere from 5 to 10%, right? And so just keep that in mind, right? A lot of people are in a lot of profits right now. Big money, right? They got a lot of winnings going on here, and we're coming into what? Quarter end, right? So you got bonuses to hand out. You got some reshifting here, reallocation, where we want to move money, where we take some off here, put some there. All right, so just keep that in mind. 1 week left in this quarter, it tends to see some money move around, and especially, think of how big some of these, like a Citadel, for example, is up. They're up huge, right? They're up huge because they have a huge advantage over everybody else because they know the orders before they're even placed because they're buying them, right? And they're the ones placing them. They're the biggest market maker or the second biggest market maker out there. So they have a huge advantage. And everybody else was losing money last year. They made billions, okay, with a B. Now, Tesla got rug pulled, and I'll show you what I'm talking about in a minute. But obviously, this trend line we talked about yesterday, right? We bounced off of it multiple times. And I said yesterday, hey, if we come down, we'll see if the trend line holds. And at first, you're like, whoa, it broke through, but then it regained it, right? And then at the end of the day, like other stocks did, it sold off below and closed below that trend line. And so that's why we need probably 268 to be the level it needs to close above to regain its footing and continue this rally. So just keep that in mind. Now, looking at the daily here, already get rejected right around 276.50. If we go back, you can kind of see why, right? So a lot of resistance right there, or supplies we like to call it. So it was a liquidity grab. Boom. This is when people started taking profits. And so, you look at this. Now, why, of course? Well, it was simple. RSI was overbought. We talked about that. MACD was looking extended like crazy. And what happened? Of course, Barclays comes out and downgrades Tesla. And the reason why I kind of found this to be a joke in a way is because, they come out and said there, well, we don't believe this rally is fundamental anymore. And it's like, really? Have you seen the chart? Get out of my face. Like, so going up to 266, 67, whatever it was, hey, no problem. That was a fundamental rally. It wasn't a gamma squeeze or nothing. And I'll show you this chart 100 times. So that's why I kind of see it to be a joke when they come out and do this. To me, it's nothing like, hey, we want a better entry point, so guess what we do? We downgrade the thing, we do a liquidity grab, bam, and then we'll roll in and get it at a better price, right? So that's kind of how I see it. Now, does that mean it can't continue to sell off? Of course. Now, of course, it can continue to sell off, and if it wants to, just watch that trend line and stuff, and watch those prices I told you about. But that kind of, it always bothers me when these companies do that. Same way when Nvidia was already up 100, 200%. They go, let's give it more upgrades. It's like, okay, I don't see anybody coming out of them and going, I don't know, is this a fundamental move? It's like, come on, man, it's ridiculous. Now, the opposite of Nvidia, AMD. What's been going on with AMD, right? And we had touched base on this probably last week or the weekend or whatever, but about the RSI divergence and everything. But remember, this one from 88 to what was like 133 was strictly off the news that they had partnered with Microsoft. They're going to try to create these chips and everything to basically battle Nvidia and things like that. But if you look, it's actually really good. Because remember, I told you the other day we filled 2 of these gaps, right? Well, now they're about to fill that third big gap, okay? And so, again, looking at this right here, you can see this trend line right here, which I just drew in. It's not just made up. I mean, there's many rejections or many bounces off of this trend line, and we're going to approach it around the 110 area. So watch the 110 area to see if it gets bought up by people who thought they missed the boat and said, oh, man, couldn't get into 130s, but I might be able to get in at 110, right? And you see the MACD starting to roll over. RSI crossed below that 50 right there on the daily. And again, that trend line sits right there where, now maybe you get to see, instead of supply, actually get to see some demand and stuff. And you're talking about, what is that, a 15% move in a short amount of time down? So again, just keep that in mind. And also, understand what's driving this one too. Here is AI stock call options volume. This is what I'm talking about with Intel, AMD, Nvidia. Look at the spikes. And look who's actually leading the way. It didn't even Nvidia. It was AMD. Look at the biggest spikes. They're AMD. You can see the shaded part, right? And so this is what's been driving it. And you need to understand that because it goes in both directions, right? You might have a 0 DTE call option driving something up, but guess what happens if big money decides to flip and start going on the put side and going 0 DTE, right? It can push it down just as fast, which I think, you're probably seeing a lot of put volume here in AMD and stuff. And so, and especially in like an Intel, give me a break, Intel's move. But anyway, so yeah, that's important to understand. But watch that 110 area, see if people start to come in and buy it up, right? It won't surprise me a bit because eventually at some point in time, especially the large institutions will start looking at these things and realize and go, well, AMD is at 8 times sales. Nvidia today is sitting at 42. Okay, so where are we going to get more bang for our buck? Right, where's more upside at? And I'm not answering the question, I'm just saying that's how people look at this. Value investors will look at that and go, oof, big difference, right? And so there you go. So just keep that in mind as well. And then you could see a shift and everything. But right now, Nvidia, nowhere even close to filling that big gap down below, right? But AMD has almost filled all 3 gaps. And if it fills those 3 gaps, makes perfect sense, hit a major trend line and make a bounce. So let's keep that in mind. So anyway, let me know what you're doing. Let me know what you talk about when it comes to Nvidia and the double and triple order, anything that's going on or not. And so just let me know about that. And then, hey, if you got anything out of it, as usual, hit that like and subscribe buttons right there below your screen. I really appreciate it. Give the thumbs up. And you guys are the best. Appreciate all of you. And I'll see you tomorrow.